Thank you, Tim. Yep, so I'm the principal analyst here at Benchmark, and all I do is lithium as well. So hopefully I'm well placed to talk about this and give a nice introduction to the market. I work with companies from mining through to automakers, from the forecasting analyst side of the business, through to the consulting side. So hopefully I can also field a few of your questions. Let's begin. I'm here to really talk to you about lithium's the element of surprise. Lithium being something that this year has given us plenty to talk about as an analyst. So it's been quite difficult to distill what I should really be talking about during this particular webinar. So I decided that I would say that prices are going up for the rest of the year, and that a recent drop in prices was not necessarily fundamentals driven. So this is my very simple graph of what's happened in the past couple of years. We all know the story, but I like this graph particularly because it is so simple. Electric vehicle production and lithium price. Really, what's happened throughout 2023 has not necessarily been a fundamentals driven story. If you look at electric vehicle sales and production throughout 2023, it's been, throughout 2022, it's been quite strong. And when we actually take a look at how much supply has entered the market throughout early 2023, there hasn't been a lot of supply. There has been an oversupply of new projects announced potentially, and particularly those coming out of China. But when we look at how, even considering some of those projects coming out of Zimbabwe that are very, very quick to come online, very quick to be built, they still haven't been ramped up. Those tons haven't actually entered the market yet. So what it really explains 2023, it was more or less a surprise to many, hence the title of this talk. It was the anticipation, firstly, that there would be a price drop in lithium. I think everybody was already expecting this at $80 a kilogram for the spot price in China, at least. Many were saying, well, when's the top, right? So I'll stick to this slide for now, because I think it's just worth looking at the trajectory, the dip, and the severity of that dip. That was the thing that was surprising the most. What was not surprising was softness in Q1. This is mostly a seasonal thing that happens, and you can see that in EV sales, EV production numbers every year. But again, that anticipation of pricing dropping, cattle coming out with their 200,000 RMB price pass-through mechanism, which didn't actually affect much of the volume in the market, but they were very loud about it. This is nothing new, again, to the industry. This has happened before, but they were very loud about it. Inventories weren't really as high as many were saying. They were just above normal levels, really. You did have a run-up in demand from last year in relation to the ending of subsidies. True. You did have a very large impact as well from internal combustion engines going on sale in China in 2-for-1 deals. And so you did have a lot of real demand impact, but you also had a big psychological point to this recent drop. Sodium ion was another one that took many headlines throughout the year, and that we were talking about a lot, despite it still being more or less a laboratory experiment, I would say. So the other thing to point out here is that there's a big difference between CIF Asia and prices in China, and I won't get into that, but I think it's worth noting for those in the audience that know that there's not one lithium price. Yes, true, but I think it's still a useful thing to talk about, which is that ex-works China price, since it is such a big market. So let's move on. Let's move on to the next slide, please. The demand outlook for 2023, and the reason why I'm saying that prices will continue to head up for the rest of this year, is that we look year on year, and yes, there are some confounding factors, such as an early Lunar New Year, COVID lockdowns from last year in China. You can still see strong year-on-year comparisons in terms of demand for EV sales, which is what you see here. And then you generally see an upward trend throughout the year that occurs more or less every year. That may be mitigated somewhat by the lack of subsidies that we did have in the system last year, that we saw a run-up in demand. We may not see that again this year, but that effect is still there. If we move on again to the next slide. We assess not just lithium prices, raw material prices, we also We also assess cathode and cell prices. I guess the point of this slide here, it's telling a very similar story in that China battery cell production will have a kick throughout the rest of the year. It has its seasonal ups and downs. But what we didn't hear much of last quarter was that, and yes, there was, of course, a softening in demand, a seasonal softening, but there was also a huge effect from raw material pricing affecting the cell and cathode price. So cell and cathode prices were coming down, but largely due to lower raw material pricing. Move on to the next slide. So that's 2023, and then through 2024, what we see is the culmination of all those projects I talked about earlier on in that piece that are not necessarily coming online right now. They're not ramping up right now. They're going to have teething issues. But the sheer number of those projects, which includes places like Zimbabwe, yes, but also in China, and in South America, everywhere really, they will come online. 2024 is when we say there will be a balanced market. End of 2024, 2025, it will be brief. However, if we look at the high case demand scenario, which is what OEMs and governments are targeting EV penetration rates to be, you can see that as soon as lithium prices soften in any way, and demand will continue to grow as it always has, we've got about 14% CAGR over the next 10 years. You can see how prices will then again shift gears, and this industry will continue to be cyclical in terms of its pricing. But it is such a huge gap from 2028, 2030, which is not that far away. So plenty of room for, and I think we should move on to the next slide. Plenty of room for new projects, plenty of room for disruptors, new technologies, and so on. This is just a spread of where projects are coming online throughout the world. Your usual suspects in terms of where the most production will be coming from in 2030, including South America and Australia, many incumbents and their expansions being very important. Next slide. China will continue to be dependent on imports largely, but they are developing their own domestic supply chain. They're putting a lot of money into developing very low cost, very low grade, high cost mica, not necessarily lepidolite, but mica in Jiangxi, and also recently putting a lot of money now into spodumene in Xinjiang. And these will have their own potential issues with sustainability, sourcing, cattle, and its relationship to Tesla. So we'll see that play out. So lithium is not necessarily just an economic story, it's also geopolitical. So move on to the next slide, where we see there is a risk more so on the supply side. Yes, there's a risk on the demand side as well, but more so on the supply side in terms of new projects coming through, that their costs are going to continue to increase, that their developmental timelines will continue to be pushed out. And this is a nascent industry, so it's not necessarily anybody's fault, but I applaud companies that are coming out with new feasibility studies to update their economics and looking at costs once again, and revising those up. And I think that that's very important. There are other risks, new technologies, new ore types, new geological provinces. There's risk of nationalization, national strategies, and so on. What that all means, skill shortages from people who know how to build conversion plants outside of China to anthropologists. So really, it's the whole gamut of skills that we need that will potentially be in shortage and may really limit any balanced market that may occur in the coming short term, maybe year or two. So if we can just move to the next slide, which is just showing you how we arrived at some of those conclusions. It's project by project in terms of supply and also chemical conversion facilities, chemical production, every single plant in China and everywhere else. Next slide. Our prices and our price forecast is made up of 3 distinct methodologies and tiers of how we look at pricing in terms of medium term and long term. The longer term pricing, which I didn't really mention here, is an incentive price, but it's informed by what's in the next slide, a cost model, which here I've outlined the methodology for. And this again is project by project. And again, this relates to this all informs how we think about pricing and how we think about project development risks going forward. And so essentially saying that, yes, for the rest of 2023, we think pricing will be strong underlying fundamentals, that recent drop in prices are not necessarily fundamentals driven, but that in 2024 and 2025, there'll be a balanced market, albeit very brief, due to some of those risks that I've just outlined. And then final note, maybe on the next slide, something I didn't really talk about a lot was those geopolitical risks, and that China or that the whole lithium market is one which we can't consider in isolation, and that we have to take into consideration also sustainability, ESG, and geopolitical supply chain risks. Yeah, thank you.
Thanks, Cameron. Very informative. We've got time for a couple of questions. Now, the actual lithium price isn't very transparent. It's quite opaque. You look at contract pricing to determine the price. When will we see lithium kind of listed on exchange where, it can be hedged and have derivatives and futures, etc.?
Not until there is a lot more volume in the market. So I don't see that happening in the next 5 years. But in saying that, yes, it is not very transparent, and contract pricing remains the dominant mechanism for pricing in the market. A lot of contracts are now linked to spot prices. While China is contract dominated, most of it is actually, for all intents and purposes, a spot market, because the contract is just for volume. So it is true to say that there's no one lithium price. It is very opaque, but I think that the spot price is something of a very good indicator of where things are going. And although maybe not always a good indicator of the cost of lithium in the cell of an EV.
And do you believe that lipidite outside of China derived lithium will become a mainstream source?
Yeah, I think mica outside of China, as well as inside China, will become a mainstream source, absolutely, and we need it. The mica in China is increasingly not a lepidolite, and they've mined out a lot of the high grade stuff. So it's, there's a whole suite of other mica minerals that we need to take into consideration, and certainly mica outside of China will be mainstream. Yeah, absolutely.
And when we talk lithium, it's always associated with EV. I'm curious if you can kind of quantify the percentage of lithium demand coming from stationary battery storage, and whether you've done much work around that and how big that market could be as well.
Yeah, sure. I don't actually have that number to hand, but I could afterwards. It's essentially an EV-driven market, so but stationary storage is increasingly important. If you would like me to send that number. Mm-hmm.
Yeah, that'd be a good follow-up. We can write something about that during the week. And of course, you've got the emerging LFP battery, which has no cobalt and nickel. Can you comment on that and how you see that, where that demand's coming from, particularly kind of ex-China?
Okay, ex-China, I mean, LFP, the way that the market has been evolving over time, that high nickel chemistries being that they have a higher range, and the fact that EVs outside of China have really been targeted towards a more affluent class. It's more of a premium, a luxury vehicle. But as the market unfolds and we start to see lower price vehicles enter the market, we're going to start seeing more LFP announcements being made outside of China, particularly with the IRA. So we're going to start seeing a larger market share for LFP outside of China. That said, there's still a huge amount of energy density that we could still get out of the high, like 811 nickel chemistries, and such a huge amount of R&D that's already been put into those nickel chemistries. And if you look at the cell plants that are being built out, particularly Japan, South Korea, they're all high nickel chemistries mostly. So we know that the market's still heading towards that that chemistry, despite a lot of talk about LFP, and LFP will become increasingly important, but for lithium, it doesn't necessarily matter much.
And how do you see the world in terms of production, in terms of global lithium production, say, moving forward? And what do your numbers look like out to 2030, for example?
Well, I think we've just recently hit our 1 million ton supply mark, and supply and demand. We're going to start seeing an extra 1 million tons of demand being added every few years. So this is quite massive. So we've had originally a lot of supply come from old gold and tantalum mines, expansions from incumbents like SQM. But this time around, we don't necessarily have that luxury. We have a lot of greenfield projects coming through in new jurisdictions, new technologies. So there's a lot of risk in that. It will be a really diverse supply chain in terms of geographies, countries that are involved in supplying. So we see that this short term, so the recent high price cycle and the prices that were high before that had incentivized a lot of new projects to come in and come online by 2024, 2025. But after that, it doesn't look, there's not a huge amount of projects, but they will start to come into the fore. You know, they've got drill holes now. They might have a resource that's being estimated as we speak. But look ahead 1-2 years, that gap from 2030 to 2040, while absolutely massive, means that there's plenty of room for new lithium projects to come online. But it will be met. It has to, otherwise demand gets destroyed and demand comes down to meet supply, and that's not necessarily a good thing. So I'm optimistic about supply, and I'm really optimistic about the number of projects that could come online. And I don't think that there being plenty of lithium in the ground is a bad thing. I think it's a good thing for the industry. I think long term, we see prices staying well above a healthy incentive price.
Cameron, that's all we have time for, I'm afraid. There's quite a few other questions here directly online. If you've got time to answer them, we'd really appreciate it.
Great. Sounds good. Thank you. Thanks, Tim.